What if your first $1,000 could be the beginning of real wealth? Most people think investing is only for millionaires, but that's completely false. The biggest mistake beginners make is waiting until they have more money. In reality, investing early matters far more than investing big. Before investing, build an emergency fund covering at least 3 to 6 months of expenses. This protects your investments from unexpected emergencies. If you're paying high-interest credit card debt, paying it off first is often the smartest investment you can make. Once your finances are stable, open a brokerage account. Today, many brokers allow beginners to invest with no minimum deposit. Many beginners try picking random stocks. Instead, focus on diversified investments that spread your risk. One of the easiest ways to invest is through an S&P 500 index fund. It gives you exposure to many of America's largest companies with one investment. Instead of investing once, invest every month. This strategy is called dollar-cost averaging. The stock market goes up and down. That's normal. Successful investors stay invested instead of reacting emotionally. Over time, your investments begin earning returns on previous returns. That's the power of compound growth. With your first $1,000, focus on building a simple, diversified portfolio instead of chasing the next hot investment. Remember, investing isn't about getting rich overnight. It's about building wealth one smart decision at a time. Subscribe for more simple investing guides.